Good afternoon. This is Oliver Slow, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of the 2-Minute Drill. A bit of a sea of red in the grain and livestock markets today. Before we get into the closing prices and headlines, do want to remind you, if you have not subscribed to our YouTube channel, head over to youtube.com. Type in Blue Line Futures, hit that subscribe button, and of course turn on those notifications to get updated as soon as we put out a new video. My colleagues in the office put out great content as well, covering some of the outside markets. That's going to be precious metals, energy, stock indices, etc. So again, head over to youtube.com, follow Blue Line Futures. We appreciate your support. Now that we got that plug out of the way, we can go ahead and get into today's prices. As mentioned, a bit of not a bloodbath, but certainly a lot of red on today's board. At the close, we saw March corn futures 2 1/4 cents lower, settling at $4.30. That market mostly a stick in the mud. When you zoom out and look at the October trading range, I think the 50% retracement is right at about $4.33. So we're just right there. And quite frankly, I think you could make the case fundamentally and technically for 25 cents in either direction from here. It's just, what is that catalyst going to be to give this market new direction? And right now, it's just kind of wait and see. Over on the soybean side of things, higher trade yesterday, gave that back today, 8 cents lower in the January contract, settling at 9.83 3/4. This continues to be a very, very range-bound market. As with corn, I think you can really make the case for a move in either direction here. A lot of that's going to be hinging on South American weather and potential trade statements or headlines that could push us either which way. Volatility relatively low in these markets, so that's something to consider. Volatility low means options are cheaper than they would be if volatility was high, so that might be a good way to play a move here in the near term. Over on the wheat side of things, wheat market, March contract, Chicago, actually made new contract lows in the early morning trade, trading down to 5.40 1/4, but settled the day 3/4 of a cent higher, and I think that was really constructive for the market. There were some positive headlines, they weren't positive headlines, but they were bullish headlines, I should say, out of Russia. That Russian wheat crop, supposedly the worst ever, with good to excellent conditions, very, very poor. Good conditions at 31%. That compares with 74% last year. So a bit of an issue going on over there. Potentially that can help hopefully turn the tide a little bit in this wheat market, which has just been trending lower with lower highs and lower lows for quite some time, with not a whole lot of new news to prop this market up. Now, over on the livestock side of things, we'll pull that up. It was a down day there as well. We had February live cattle 75 cents lower, settling at 188.32. January feeder cattle is $2.35 lower to 256.95. And over on the snout side, February lean hogs $1.50 lower to 86.35. Over on the livestock markets, the volatility starting to pick up a little bit, still relatively low. But feeders, the first 3 days of the month, $4.10 range. So we are seeing the volatility expand. The feeder cattle, I think it's also interesting to note that we tested 259 to 260 in that January contract for 7 straight sessions, including today's session, and just couldn't really get out above there. So to me, that indicates that maybe everyone that's long this market is already long, and we can't entice new buying activity at those levels, and that leaves the door open for long liquidation, which we may have started to see here this week. With the weakness in today's trade and Monday's trade as well. Now, Monday, we did have a lower trade and reversed higher on Tuesday, so just because we're sharply lower today doesn't mean we're going to see any follow-through. But if we do see follow-through, that could start to feed on itself and snowball a little bit. And I think the same can probably be said with the lean hog market. Lean hogs, rejection against last week's highs in yesterday's trade, and then I think that carried over into some pressure through today's trade there, with funds holding a record net long position there of about 130,000 contracts. Again, the risk of long liquidation is very real in these livestock markets, so something to consider. That doesn't mean the market can't go higher, but it does mean that there's the potential for a high velocity sell-off if everyone's rushing for the exit at one door. Do the fundamentals warrant that? Maybe not, but that's just the way the market works sometimes. So something to keep an eye on if you've got downside to protect. I think now would probably be a good time to do that. In the outside markets, S&P and NASDAQ, new all-time highs today. This after Federal Chairman Jerome Powell spoke at a conference in New York City. There is some big data points out here later in the week. On Friday, we'll get an updated look at non-farm payrolls and unemployment. Expectations for non-farm payrolls, 202,000 jobs, and the unemployment rate expected to tick up to 4.2%. That would just be up 0.1% from last month. And then oil, we've got some news tomorrow. We've been stuck in about a $5 trading range for the last 2 months, but tomorrow we do get an OPEC Plus meeting where expectations are for delay in unwinding production cuts. We have seen surprises in OPEC meetings in the past, so this will be something to keep a very close eye on if you're in the energy market. So that's what we're looking at. If you've got any questions at all, don't hesitate to reach out. My direct line, 312-837-3938. You can also email me directly, Oliver@BlueLineFutures. Remember, trading futures and options involves substantial risk of loss, and it's not suitable for all investors.